And good afternoon, everybody. This is Michael Fibonacci. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Tuesday, June 1st, 2021. Continues to be in a very erratic market, as we witnessed today. And we followed through on yesterday's analysis in that the market did get up. And it did break to a slight new high up at 42.30, not above the 42.38, which is what we really want to see or wanted to see in order to put a little bit more concrete around the foundation that the market had completed the pullback here and that it was beginning to form a five-wave structure. Well, that ended on the result of the sell-off right off of that 42.30 high this morning. The market, come on, keep going. All right, the market just kind of dropped about 45 points before recovering. And that was a pretty steep sell-off. And for those that just trade what's in front of them, was a very profitable sell-off. And so you could quickly earn your day's pay, I suppose you could say. In any case, the market now has put in a little bit more, so I can put some labeling on what we're doing. And I'm going to continue to think that, to believe that we are still in a corrective process. This wave is being much bigger than what I anticipated, but that might be what we get. So my best interpretation right now is that this is wave A. This whole affair was an irregular B wave because it went to a high above wave A. And wave A was at 42.1275. So it went above that where it started, so that makes it irregular. And it did kind of probably come in at like 1.382 on the upside of wave A. But now it is dropping. And being that this is an irregular, then what comes into play is that the most common area for a C wave to move down to would be 1.618. Again, still related to the A, but now we have to take into consideration what it's already done in going up, and that'll probably increase the size of this C wave down. Well, we do have support at 41.87. And I'm going to say, we're going to say 41.90 down to 41.85, but the whole zone is going to be 41.90 down to 41.80. And actually, we could take it all the way down to 41.70. So it's a larger zone as to where we think that this may complete and then begin its next rally phase, which is a minute wave 5 within an ongoing 5-wave advance of minor degree, which is in an ongoing 5-wave advance of intermediate degree, which is in an ongoing 5-wave advance of primary degree. So the primary degree finish would be a primary wave 3. That'll set up the stage for a little bit larger, not a little bit, it'll be a lot larger than what we're doing here. And I would not anticipate the market's going to hang out in the top third of from its all-time high when we're getting into that size of a correction. The size of this correction and the fact that the underlying bias still remains. And so until the market figures out, no, we're not going to really go up anymore. We're going to start really going down. There's still in the forecasts out there, this vision that we are going to move to new highs. In fact, I still hold it because of the structure, because of what's still required before the entire move is going to be complete. I mean, this minor wave 5 and in turn the intermediate wave 5 all really need to break above 4,238.25 and really head up to the numbers that we've been giving, 4,300, 4,400 up into that area. But we're running out of room unless the market really gives a clearer example. But right now, it's just kind of expanding its range, but continues to do 3 up. And then as this, it can't be a 4. Even if I want to go 1, 2, 3, it can't, because it came down almost immediately and broke 4,216. And it couldn't, because that was the completion point. Actually, 17.5 was the completion point for wave alignment. So it couldn't. Once it does that, it becomes invalid as a 5-wave advance. So it's left as a 3. Now, yes, 3 waves can be in like an upward triangle, but, and this could possibly be, and this particular side of the triangle is not really kind of forming. But what happens in those is that all the waves end up being 3s. And that kind of could be the ticket, but that would suggest that that completes wave 5. And that's the part that I just cannot go with right now. I don't think that we're going to fail on this scale. If we are, the market will tell us. I would not be the one to say, oh, the market failed, we're all going to start selling. No, I'm going to trade what's in front of me. But could it possibly have done it? Yes, and it would be in a failure if this gets labeled a 5 and a 5 and a 3, all the way up on that type of a degree. So smaller degrees, yes, but the upper degrees, I just don't think so. But as I say, stranger things have happened, and so we will be on the lookout for it. But right now, I'm expecting this to come down, hold within these zones, and then turn higher again to finish the larger sequences. First of all, to finish the minor wave sequence, to finish the intermediate wave sequence, and to finish the primary degree wave sequence. So downside there, upside. If it's going to turn from here and start to move higher, it's really got to do a better job. It's got to do it very much similar to what we did over in globex, but with more oomph and with more volume. Going up on low volume just means that the sellers are just kind of stepping aside and letting them do it. But there's not enough buyers to really push it because the sellers are stepping aside. They're getting tired of selling it, and maybe they're running out of bullets, whatever the situation may be. But it has to kind of go up on some decent volume, which means people are returning to the buy side. So that's what I've been looking for. If indeed it's going to confirm upside moves. Otherwise, it gets held by these resistance zones and starts to come down from there. Let me just drop this down so we can see those resistance zones. There we go. So you can see that it just starts to come down, and if it starts to go up, it's going to meet resistance 4202, and then next up we have 4205. So for 2 to 5 to 8. So you can see they're pretty tight, but we have it all the way up. So that could mean, you know, just we go up and we bounce, we go up and we bounce, we go up and we bounce, and we don't really get anywhere because we've got stacked resistance all the way up to 4230. So the path of least resistance right now is down. But then again, we have support. We've got a very large support zone, but it's not as tight as that resistance. So there's a little bit more room on the downside to push without running into support. So, you know, we got this, and even though it's only a $10 zone, it's still a $10 zone. And I can open it up and call it, you know, 70. So it's 90 to 70, so 20-point zone. 90 to 60, a $30 zone. That can be pretty big for the S&P. Anyway, I'm going to leave it there. We've got downside, we've got upside. The market has its marching orders in order to kind of give us a clearer picture as to what are you trying to do here. Are you going to finish a rally, or are you going to really start a new decline? So we're going to let the market determine that. And the next update will be on Wednesday, June 2nd.